Hello, this is Dean Malone with Compass FX. Hope you're doing well today and you get some good trades. Let's take a look at the big picture. Tomorrow we have the FOMC statement. That's where the Federal Reserve comes out and makes a statement as to what their intentions are going forward, also regarding the federal funds rate. No expectation is seen in the change in the Fed funds rate, staying at 0.25%. But the big question is for everyone is, will they or will they not start tapering of their bond buying program, or otherwise known as quantitative easing? That's the big question. And on top of that, whether they taper or they don't taper, how will that affect the market? Well, these are all big macro issues that may or may not have a direct impact on your trading, but I think it's important to also take a look at the technical aspects of the marketplace and ascertain what the market's trying to do. On the euro dollar, we've seen since about May 29th this very strong move to the upside. As a matter of fact, it's moved here about 575 pips. Now, it has had a bit of retracement right here, but in my opinion, that was to come back and test more or less an average range high right about in this area right here. And the market did that. You got these 2 or 3 highs right here, but average highs run about right in this area. So the market came down and tested that area. But literally from this point all the way up to where we're at, we've not seen that much retracement along the way. And what I note with the Traders Dynamic Index is we have lower lows coming across here, but yet we have higher lows in price. Do you notice right here we have higher lows all the way up, and here we have lower lows? This is a sign of hidden divergence. This means it's going higher. So just because the Traders Dynamic Index is way up high like it is right here, and many of y'all using the synergy model are thinking, well, it's set to roll over. Not necessarily. When the market pulls back towards about the 50%, we see the green and red move back to about the 50 level here, but yet price doesn't, and we get these higher lows, we get lower lows in the Traders Dynamic Index, that is a key sign for continuation and to look to see the market go up higher. Well, where to? If you take a look at the euro dollar on a weekly chart, I've noted some specific levels, and we are above the halfway mark of a certain range. If you note here that back in the first part of 2013, back in January, we hit a high close to 137. Then we came down almost, but not quite, to some lows that we have seen back in 2012, early 2012, around January here, and then back here in 2010. So we have a support level about 126.50. Well, between 126.50 and 137 is 131.75. Interesting that we closed right about 131.75 last week, and we're working off of that. Where to? Well, there's a high point right here. So tomorrow, depending on what the FOMC does, if we see weakness in the dollar, strengthen to the euro, or it be a risk-on scenario, I would anticipate a potential move up to 134.85. It might even pin high to 135, then come off of that. But right now, my thoughts are, given what I see in the Traders Dynamic Index, this is a nice setup here to the upside. There's a possibility tomorrow we hit 134.85 to possibly 135. And again, with the hidden divergence seen in the 4-hour chart, it looks like a go to the upside. Now let's take a look at the pound dollar. If you take a look at the pound dollar, it's had an extraordinary move up as well. From that May 29th low, it's moved up to a high of about 743 pips, just about. It's had a bit of retracement from this low point. We've come right down and settled at the 23.6. Interestingly, it has a 2-pin low right here. That right there is one of those little telltale signs that it wants to go higher, and that's exactly what it did. It trapping some short sellers of the pound today down in this area and bouncing up pretty strong back to about the 56.40 area where it sits right now. Again, take a look. Overall, if you take a look at the lows in price, the lows just keep getting higher. And today, we closed higher than we did previously. So in effect, we have these higher lows. Taking a look at the Traders Dynamic Index, we have lower lows. Another sign of hidden divergence, the possibility of continuation on up. So just don't think for a moment that, hey, we've gone 700 pips, it's got to come back. Not necessarily. If you go out and take a look at the pound dollar on a weekly chart, you'll see that we are approaching a midpoint of an average low to an average high. We have an average high of about 163 sitting up in this area. An average low going back here in mid-2012 and again in 2011 and back here in 2010 we have these lows. Now we did put in a pretty good low down here this year at 48, but we bounced right up off of that pretty quickly and then came down to about the 150 level. I'm looking at more or less these as the average lows. This is kind of a push down, kind of a spike outside and then back into it. I'm looking for the potential to see this run up to 157.90 because that's the halfway mark based on these previous lows and these average highs coming across here. You can see it kind of pushed up above up here, push a bit below down here. If you take this out, take that out, you can see that we're in a pretty sizable range right here between 163 and 152.80, putting us at a midpoint of 157.90, possibly the 158 level. So right now, given the hidden divergence seen in both the euro dollar and the pound dollar, and given the tone coming out of the FOMC tomorrow, if they continue with their quantitative easing, we can see then a possibility of risk on, see the pound push up higher, possibly up to 57.90 area, and possibly see the euro dollar push on up there, currently getting up to around that 34.85 level, possibly 135. If for whatever reason we get the tapering here in the US, we're going to have to see some other factors come into play to see some strength in the dollar, but we might get some immediate strength from the announcement into the dollar, but I think there'll be some settling before there is actually some true overall strength in the dollar. So that's my view looking at the marketplace going into tomorrow for FOMC. Sometimes it's just good to take the big picture before going into an event, seeing some levels out there and getting a feel for direction of the marketplace. With that being said, be careful tomorrow as the market is uncertain of direction given the FOMC's questionable if they're tapering or they're not tapering. Well, this is Dean Malone with Compass FX. Y'all make it a good day. Get some good trades. We'll talk to you next time. Bye-bye.